Welcome to the Sharkpreneur podcast with Kevin Harrington and Seth Greene. Kevin Harrington is the inventor of the infomercial, one of the original sharks from the hit TV show Shark Tank, and has generated over $5 billion in TV and digital direct response sales. Seth Greene is the world's first trusted authority on cutting-edge direct response marketing, a best-selling author, and the only 3-time Marketer of the Year nominee. On the podcast, Kevin and Seth interview sharkpreneurs who share straight talk on what it takes to explode your business.
49 faces looked to him in triumph. Over the last 12 months, they had each taken turns and promoted his business for a week at a time, driving over $987,342 in revenue. What if you had a network of 50 centers of influence who promoted your business every week for a year? Grab your copy of the #1 Amazon best-selling book, The Ultimate Guide to Growing Your Business with a Podcast, at 33% off the Amazon price by going to ultimatepodcastbook.com. Again, that website for 33% off the Amazon price is ultimatepodcastbook.com. Welcome to the podcast. This is your co-host, Seth Greene. Today, I've got the good fortune to be with a longtime friend of mine, Kevin Guttman from C2 Financial. Kevin is a seasoned mortgage professional who specializes in reverse mortgages, dedicated to helping seniors achieve financial stability and peace of mind. Kevin, thank you so much for joining us.
Seth, it's great to be with you. Good to see you again. Thanks for having me.
Yes, of course. It's been a long time. Let's dive right in. So you are a little bit controversial in the industry. So we'll start right off the bat. Dave Ramsey and Suze Orman are well-known so-called financial experts. Why do you believe they're wrong about reverse mortgages?
Yeah, great question. So, Dave Ramsey's famous for this rant he has out there on YouTube about this 92-year-old man in Chicago. He's going to lose his house because he has a reverse mortgage. Well, when you dig a little deeper, the truth is the gentleman hadn't paid his property taxes. So, Seth, whether you have a mortgage, no mortgage, or a reverse mortgage, if you don't pay your property taxes, the county's going to foreclose on you. So that's one thing. The other thing, you talk about Suze Orman, she's an advocate for home equity lines of credit, which are fine. But what she doesn't explain is a home equity line of credit only has a 10-year draw period, and then the repayment. Your equity can't grow like it can with a reverse mortgage line of credit. A HELOC, home equity line of credit, can be cut, frozen, or the full payment demanded. None of those things can happen with a reverse mortgage. So to use a Major League Baseball analogy, a reverse mortgage line of credit is like the major leagues, and a HELOC would be like single A, double A baseball. That's a comparison of the two.
That is a excellent sports analogy. Now, if we've got folks who either they're considering a reverse mortgage or their parents are considering a reverse mortgage, if you're doing a reverse mortgage and you're getting money from the bank, are those proceeds taxable?
That's another great question. A lot of people think they are, but anytime you take money from your mortgage, whether it's a cash out refi or home equity line of credit or a reverse mortgage, that money is not taxable. Loans are not taxable. It's not considered income.
Ooh, awesome. Okay, so I don't have to pay taxes on it. How does a reverse mortgage boost that home buyer's purchasing power?
So, a lot of people, they've lived in their home 20, 30 years, raised their kids there, but maybe at this stage of life, that home doesn't suit them anymore. Maybe they can't navigate the stairs very well, or they don't want to clean the big house, or they don't want to maintain it, shovel the snow or mow the lawn. As you get older, you want to travel more and you want to relax. You don't want to spend time maintaining your house as much. So what a reverse mortgage can do, it can help somebody get a house that better suits them in this stage of life, i.e. single level living, lower maintenance, maybe a smaller home even, although a lot of people even take a bigger home at that point if they want to. What a reverse mortgage does, though, it allows somebody to increase their purchasing power by about 35 to 45%, depending upon their age, the interest rate, and the value of the home. Those are the 3 factors that determine how much somebody can borrow.
So are you saying I'm taking a reverse mortgage out on the house I've got and using the cash from that to buy a new house?
Actually, let me explain a little bit better. What actually happens is somebody's going to sell their existing home. They're going to take the proceeds from that. They're going to go buy another home, put one large down payment down, not have a mortgage payment going forward. As long as this remains their primary home, they maintain it. They pay the property taxes, insurance. If there's HOA dues, pay those on time. If they do all those things, they can live to age 150. In other words, they can't outlive it. So in a nutshell, they can buy a newer home in a better area of town, closer to family perhaps, lower maintenance, updated amenities with no mortgage payment.
Well, that sounds amazing. So how can a homeowner use this to turn their mandatory mortgage payment into what you call an optional one?
Yeah. So, a lot of people don't know, but people can make a mortgage payment even if they have a reverse mortgage. They don't have to. That's the difference between a traditional mortgage and a reverse mortgage. They're both mortgages. One, you must make a payment. The other one, the payment's optional. So what a lot of people do is they repurpose that mortgage payment. Let's say it's $1,500 a month, and maybe their retirement's a little bit light. So they work with people like you work with, financial planners. You're coaching these guys all the time. And now they can repurpose that money, have a stronger retirement to where they have more money available to them as they age. Another thing I see, Seth, is maybe they don't have long-term care insurance. And that's expensive. Maybe they don't want to pay for that out of pocket, but now they can take money from their equity and shift the risk from themselves to the insurance company, the insurance policy, and they got insurance, long-term care insurance covered. Because you saw that study, I'm sure, by Fidelity, right? That 65-year-old healthy couple is going to pay $315,000 in healthcare expenses as they age. Well, why not shift the risk away from yourself and your own family, your own assets, to the insurance company? Just like you have a homeowner's insurance policy, an auto insurance policy, health insurance policy. Now you get a long-term care insurance policy. You don't have to worry about paying those expenses out of pocket.
That makes a lot of sense. So I think you alluded to it already, but if you could dive a little deeper on how that reverse mortgage enhances somebody's financial security.
Yeah, so we did talk about boosting retirement savings, of course, paying for long-term care. A lot of times people want to help their kids or their grandkids. I had a family here in Colorado, and they had been missionaries in Europe, and they came back from the mission field, didn't have a lot of money, but they had a lot of equity in their house because they had bought a house early on and kept it for years. And they said, they got a reverse mortgage just to eliminate their payment. A few years later, they called me back and said, hey, now we want to do a refinance on their reverse mortgage, so that they could take equity out to help their daughter with the down payment on a house. So there's lots of ways. The only restriction the government puts on reverse mortgage proceeds is somebody cannot purchase an annuity. That's the only thing. And they can do anything else they want. They can donate to charity. They can help their kids, their grandkids. They can buy a second home. They can do anything they want except purchase an annuity. That's the only restriction.
Now, do I have a choice if I do a reverse mortgage of how I get my money? Do I have to take it all in a lump sum? Can I tell them to give me payments on that money so it function like a stream of income? How does that work?
Yeah. So there's really three ways somebody can access their equity. Like you mentioned, lump sum, monthly payments, or a line of credit. I had a financial planner call me one time and he goes, hey, I think I know the secret sauce of these reverse mortgages. I'm like, oh, good. What is it? Tell me. He goes, it's the line of credit. I'm like, you're exactly right. Because the line of credit, Seth, it's insured, it's guaranteed, a portion of your equity is protected, it grows by compound interest tax-free. When you start drawing the money, you convert it to monthly payments or lump sum. That money is also tax-free. So it's a very unique financial tool that if people learned about it, they would say it's too good to be true. And what I say, it's not too good to be true, but it is too good to be free because they're not cheap. Why aren't they cheap? Because most reverse mortgages are FHA backed and they have mortgage insurance. So, for example, a $500,000 house, somebody's going to pay 2% mortgage insurance premium on that. That's $10,000. That makes it an expensive loan. But what does the borrower get for that? It becomes a non-recourse loan. So most loans we're personally liable. If you and I have a mortgage, we're personally liable for that note. If we miss a payment, the bank or the mortgage company calls up, say, hey, what happened? Where's the money? That can never happen with a reverse mortgage because it's a non-recourse loan. The only way the lender gets repaid is through the sale or refinance of the home. So that's another protection that it has for borrowers.
That's really interesting. It's a perfect segue. So what are the eligibility requirements for a reverse mortgage?
Yeah. So somebody, at least one of the borrowers needs to be 62. It has to be on their primary home. it has to be either a single family home or a town home, a patio home, a condominium that's FHA approved, a 2 to 4 unit complex, as long as they live in one of the units. And then they have to have enough equity. Usually it's about 65% or more right now because interest rates are so high. And they have to maintain it, pay the property taxes, insurance on time. As I said, as long as they do that, the term of the loan is 150 years. By the way, unlike a traditional mortgage, we don't look at credit scores. Sometimes people call me and say, I have an 800 credit score. I'm like, that's amazing. Congratulations. But it doesn't matter with a reverse mortgage. We look at credit history. We look 2 years back on credit history. If somebody has clean credit history 2 years back, they qualify. Even if they don't, we can help them get a escrow account where we would escrow their taxes and insurance. Most people pay that separately with a reverse mortgage, but if they have spotty credit, then we can do an escrow account for them and they don't have to worry about that.
Awesome. What happens at the end when the last borrower permanently moves out?
Yeah. So the loan becomes due. The estate or the heirs or the borrowers have up to 6 months to sell or refinance. Whatever balance is due is paid off, and then the proceeds go to the homeowner, the heirs, or the estate, just like a regular mortgage. If they need more time, as long as they're actively trying to sell or refinance, they can ask for an extension. In fact, they can be granted 2-3 months extensions. So basically, they have up to a year to sell or refinance the home.
You've alluded to some of them, but kind of summarize for me, what are the main advantages of a reverse mortgage?
Yeah. Obviously, no monthly payment. And when you're on a fixed income, especially the last few years, we've had high inflation. The seniors are the ones who feel that pinch the most. They can remain remain in their home and retain title of ownership. They maintain their independence, more cash flow. Of a mortgage payment, you're taking the biggest expense out of your budget, frees up some money. They can sleep better at night. Really, it's peace of mind. But there's also drawbacks we should talk about too.
What are some of those drawbacks?
Well, there's two really. We talked about the cost. It's expensive. It's more expensive than a traditional mortgage, but you also get a lot more than you do with a traditional mortgage. And then there's going to be less equity for the heirs because you're living in your home, but you're not making a payment, and so the interest is accruing. I would say this though, because how much you can borrow is so low, 35 to 40%. You're earning the house is appreciating at 100%. You're borrowing 35 to 40%. So there's still equity at the end, just not as much.
You have helped so many people. What's your biggest challenge now?
People still have these misconceptions about how they work. And I always encourage people, whether you do one or not, just learn about it, understand how it works. So it's a tool in your tool belt down the road if you ever need it. I always say sooner is better than later. In fact, I tell people there's really 4 questions everybody should ask when they consider getting a reverse mortgage. Do we have a few minutes I can go through those?
Yeah, absolutely.
Okay. The first one is this the right time? The right time meaning you qualify. You're old enough, you have enough equity, you have enough income, your credit qualifies, you have the right property type as your primary home, etc. That's the right time. Why do I say that? Because the last few years, I've had so many people call me back who looked at this in 2020 or 2021 when interest rates were 3%, 2%, and now they're 6, 7, even we touched 8 last year. Okay, I'm ready to refinance. Well, higher interest rates, lower borrowing power. So now they didn't qualify. So the best time to get one is the day you qualify. Even if you never even use it, it just sits there in the background, kind of as a safety net, as an emergency fund to draw on if you ever need it. You should look at that. The second question is this the right program? As I mentioned, a reverse mortgage is the only mortgage out there where no payment is required. It's optional. So if somebody's looking to free up some cash in their budget every month, this is a great option to look at. Again, whether you need it or not, just get it and let it sit there. Let it earn interest in your favor. I had a lady one time, I was doing a seminar at a senior expo, and she came up before my presentation. She said, I'm not sitting in your class because my house is paid off. I said, that's amazing. Congratulations. What's your house worth? 400,000. I said, that's awesome. I said, how do you feel about having $400,000 of debt equity earning 0% return on investment? She thought for a second. I said, I'm not talking about the appreciation. That's kind of realized when we refinance or sell. I'm talking about that equity that's sitting there earning zero. And so she did come to the seminar and learned how she could get about 35 to 40% working for her by compound interest, insured, protected from the market, guaranteed, etc. And then the third question is, are we the right company? So there's only 100 companies in the country that do these. I work for C2 Financial. We're the largest reverse mortgage broker in the country. We're in San Diego, A+ rating with the BBB, and member of National Reverse Mortgage Lenders Association. Great company, great lender. Why is it important? Because we have 13 of the 15 reverse mortgage companies that actually issue the paper for reverse mortgages. So we can shop for people and save them time and money. And then the final one that people should consider when looking at a reverse mortgage is, am I the right guy? Am I the right guy to help you? And what do you look for in somebody? Well, I think I personally love the BBB because I think they vet businesses and protect people. So I'm A+ with the BBB as well. Seth, you actually helped me publish 3 of my books, the very first ones I wrote. And I just released another one called A Reverse Mortgage Changed My Life. And so, I mean, you got to know a little bit if you're going to write a book, right? So hopefully I've helped enough people and heard enough stories and learned the program well enough to be able to talk accurately about it. And then I'm one of only 219 people in the country who is a certified reverse mortgage professional. What does that mean? That means I've been doing these long enough to sit for the test. I passed the test where only 25% of people pass the first time. I commit to a code of ethics and commit to continuing education. It's only 219 of us in the country. So if somebody wants to work with a generalist, like I say it this way, if you have a heart problem, you don't go to the family doctor, you go to a specialist, right? You go to a heart doctor who's going to make sure you're getting the right diagnosis, the right surgery, whatever you need. Same thing with a reverse mortgage. It's much, much different than a traditional mortgage. So you want to work with somebody who specializes in these because they're very unique. And we want to make sure people understand how they work and make sure we don't put people into something that isn't going to help them.
Well, that makes a lot of sense. And we know your time's incredibly valuable. We greatly appreciate you spending some of it with us. Thank you for coming on the show. And thank you for, of course, working with us to publish a number of your books. For our folks watching or listening, where is the best place for them to go to learn more about you?
I have, in fact, Seth, you built this site for me, which is still strong and helpful to so many people. I'm so grateful. But it's reversemortgagerevolution.com. And it has videos and FAQs and articles and blogs and interviews like this one. And it's just so great. And Seth, I just got to tell you, you've been so helpful to me over the years. And I'm so grateful. You and your team are just amazing people. And like I said, this website's still out there. The book's still out there. So thank you so much. And thanks for having me on your show.
My pleasure. Thank you for coming back on. And thanks everybody for watching or listening. We'll talk to you or see you next time.
Why do so many businesses struggle while others seem to explode overnight? Do you wish you had the secret to this type of exponential growth? Now, I've scaled more than 20 businesses to over $100 million, and it's not just luck. In my new book with Mark Tim, Mentor to Millions, you'll learn the repeatable framework I use in all my business ventures for massive success. Order at kevinmentor.com and get over $1,000 in bonuses. Head to kevinmentor.com.